Hi, this is Joe Rabil. I wanted to talk and go a little bit deeper into the 1, 2, 3 change in trend pattern that I outline in my book. Um, I know there's some confusion about drawing trend lines. I'm going to try and simplify it a little bit. But whatever you do, however you approach drawing trend lines, just make sure they're consistent. Always use a consistent approach. Um, I'm just going to start. I've got the chart of Kroger Company here on a daily chart. I'm going to start at the left side of this in February of this year, or I should say in 2019, where you peaked up and it violently sold off, and then we got to rally up. I don't really see a period here where I made a new low and I have a prior high where I can draw in a trend line. So I'm just sort of looking at this and saying, I know this is trying to turn the trend back to the upside based on the way the 18 is turning up. I don't think I have a 1, 2, 3 change in trend in reality. I mean, if I wanted to draw this here, I could say, okay, I've got the trend line break, but I never really got a test of that low. It sort of rallied up. And I think the point I want to make here is, at least on this segment, is that this is not an ideal situation in terms of a 1, 2, 3 change in trend, and they're never going to be picture perfect, at least not in most cases. But if I were to I just want to point something out. So let's just assume this area, we break the trend line, we come up, we test the 18, and let's just say that's our test of the low. And then we rally up and we make a minor new high. So if I'm doing this by the rules and following them to a T, I'm saying I broke the trend line, I got my test, and now I made a new high. So that's a 1, 2, 3 change in trend. Here's the problem. I circled this area. I'm going to switch this chart to a weekly. And let's just zoom in and let me show you where that circle is. That circle on a weekly chart is below a declining 18 and 40. 18 is below the 40. Both are declining at kind of a parallel level in a way. This is more of a downtrend on the weekly. And so I'm really not interested in, on a daily chart, looking for a long here. In fact, I would actually be saying, if this actually tries to turn the trend to the upside, I'm going to be looking for an opportunity for failure at this point, because I know the weekly chart is down. So I don't want to, I do a lot of videos on the 2 time frame trade. I want to focus in on the 1, 2, 3. But I want you to understand, you have to take it in the context. You can't just do a 1, 2, 3 change in trend and buy, and then a 1, 2, 3 change in trend and sell, and then a 1, 2, 3 change in trend buy, and then you're buying and you're going long and you're going short. You have to look at the higher time frame. You got to take it in the context. So I'm looking at this now and I'm saying, okay, I've made a low here, and this made a new high versus that peak, just barely, but it did. So I'm going to go back to the prior low. So if I make a new high, I go back to the prior low. That is right there. This bar I'm pointing at right there, that is my anchor for my trend line. And then I'm going to go back to the previous. In fact, I'm going to find the lowest low that doesn't penetrate prices. So this goes through. It doesn't penetrate any other prices. It's going straight from this low straight up through here. So if you notice what happens, I'm going to zoom in a little bit. Let me go back a little bit so you can see a little better. So you break the trend line, you rally up and test this high. That's 2. So let me just make this crystal clear. The trend line break is 1. The test of the high is 2. And then when I get a test of the high, this is how I handle this. So I know the trend line break and then the rally. I'm drawing in a horizontal line right here, and I'm drawing in a horizontal line right here. I now have framed out this stock. I know where right now we're in a stage 3, at least when you're inside this here. You're in this stage 3 period where you don't know if it's a pause and it's going to keep going, or whether it's a reversal to the downside. Now, if I go look at the weekly chart, I have a much better idea of what to expect. I think it's going to the downside, and I'm going to probably anticipate a little bit, and maybe I'm not even waiting for 3. But even if you did, you take 3 would be the break of this low, this horizontal line right here. So a 1, 2, 3 change in trend would be a trend line break, a test of the high, and then when you come back down through the prior low that was made, you are now reversing the trend to the downside. And then from that point, I can now draw a new trend line going down. And what I might do in this case is actually go back in time a little bit. And this is the highest high. And as long as I'm not penetrating prices, so right here, so when this low was made in June, I'm going back to the prior high and I'm looking at it and saying, okay, that's my anchor point now here. And I'm going to go back to the prior peak and draw a trend line in. So when this was violated, I have the potential for a 1, 2, 3, but what happened was it broke the trend line and then it just went to a new low. So I'm going to take this trend line and extend it out, going further out like this. So now I have a new low here. Here's my prior peak. That's the anchor point for the trend line. Then I go back in time and I'm using the highest high without penetrating prices. So I can now penetrating prices, just so you understand, it would be like if I'm drawing a trend line and I'm going through a whole bunch of prices to get to a prior peak. That's not, that's not a real trend line. You want to look at the highest high prior to the low and then draw your trend line back without intersecting any other prices. So I can look at this and say, okay, I've broke the trend line here. That's my 1. I'm going back and testing after doing that. And a lot of times it'll happen this way where you're testing the 18 or the 40. That's 2. So I have broken the downtrend line. I'm testing the low. And I, at this point, am going to frame this stock out. And I know that the stock is either going to take out this high and change the trend to the upside, or it's going to come back down through these lows and be more of a continuation pattern. And all this was a pause. The trend line break was a change in trend. I should say a transition of the trend, but it wasn't a full-fledged change, and it didn't turn it to the upside. Instead, it would have rolled back down. But in this case, what we did, we broke the trend line. That's number 1. We came back and tested, and that's 2. And then when you take out this horizontal line, you have turned the trend back to the upside. So I wanted to just give you a little bit more detail on this. In fact, I'm going to show you one other thing. I'm going to draw this trend line in because in reality, I have a low made and then you rallied up and then you made a lower low. So I can look at this as a bottom and that as a peak. And I can say, you know what? I mean, I can draw the trend line in going back. Now, I can't use the highest high because if I use this high or this high, look at how I'm intersecting all these prices here. All these prices are being intersected. So I can't do that. I can only go back to this peak right here. Now, here's the interesting thing. If I zoom in on this, you broke the trend line and then just in one bar, you came down and tested the low. And then when you turned back up, that was 3 and you rallied your way back to the upside. Now, in this case, if I know I already have a longer term trend line in place, which this did, because once this peak was made and you went to a new low, I have this trend line is drawn. So in this case, if I'm doing this sort of short-term reversal pattern, I think it's sort of short-term because it happens in a very short span of time and the trend line is not based on a long-term trend. I'm probably just looking as a target back to this prior peak. That's sort of the area that I'm looking for. So I wanted to just give several examples in one stock of how you should continuously be looking for change in trend in both directions. Now, if you use the moving average environment, this is a buy signal that fails. And you look at the MACD making a higher low when price is making a lower low. So that is a momentum divergence that follows with an anti-pattern. And then you have another anti taking place here on this trend line break. These are all, the MACD and the moving averages are all supporting evidence to understanding the 1, 2, 3 change in trend. Once you understand that, you can overlay all these other things and they will make a lot more sense to you. Hope this was helpful. Please subscribe below, and we'll talk to you soon.